Hey guys, welcome back. In today's video, we are talking about the AMC synthetics, the unlimited Moass, how more people are buying AMC, and many more in this video. First, we're taking a look at this. Riddle me this. AMC just added 2 new revenue opportunities with Netflix and Narnia theatrical release in 2027, the Arena 1 live concerts across AMC theaters. Market is supposed to be forward-looking, yet AMC is valued lower today than before these announcements. Now, firstly, let's add on to this as well, which is talking about the Netflix Narnia theatrical release. And not only are we talking about the future releases, but it also shapes up to what we have in potential for the coming future as well, with more collaboration. But of course, with all of these news, when you take a look at AMC today, we're down 6%. We are currently at 1.41, and it's just getting ridiculous. Now, I understand that there will be people who are frustrated, but we have to realize what is going on. Even before ending last week, you can see people are saying AMC stock closed at 150 as predicted by so many. Anyone surprised? And so when the price becomes predictable, when you know exactly what they're going to do, it just shows how much of a manipulated market we are in. And so once again, when we take a look at what's going on with AMC right now, despite the fact that there are all of these news coming out, we know what the truth is. We know what we are buying. We know what we are waiting for. Yes, it's frustrating, but the truth is that AMC is doing extremely well and it has plenty of opportunities. When you apply the logic to some of the stocks that's on fire right now, like the memory stock, like the photonic stocks, you're seeing how they are all forward looking. Yet when it comes to AMC, the same doesn't apply, and it's because of exactly what we've said. The institutions do not benefit from this, so they can't allow AMC to go up. Because bear in mind, we are seeing more and more people upgrading the price target for AMC. We're seeing them changing their ratings from sell to buy, from neutral to outperform, and plenty of this as well. Multiple institutions have raised the price target of AMC, all showing the kind of the projections of AMC, the potentials of AMC. Yet despite this, we talked about this with how market makers are now continuously internalizing their executions, internalizing all these FTDs that we talked about, and just manipulating the market. But we know exactly what is going on. Even take a look at some of the data. This is the strongest box office start in history. As of May 10th, 2026, domestic year-to-date gross has hit 2.86 billion, the highest January to May total we've ever seen. You can see compared to some of the past years how far we are ahead. But it doesn't stop there, because we are seeing the highest May run rate ever in the history of the company. Now, these particular sort of headlines where we're seeing the monthly record being broken in the history of the company, you've seen plenty of times in 2026. And it just goes on to talk about what we are expecting. It goes on to talk about how well of a box office we are expecting and how AMC is supposed to profit off of this. You've already seen the Q1 report. You saw how well AMC did because of Q1. And now as we see a bigger Q2 go into a bigger Q3 and of course bigger Q4 as well, when you talk about how well AMC has done, you can imagine how well they will do. Not to mention the innovations, the improvements, the efficiencies that is being improved with AMC right now. That's only going to get even bigger. And one thing I'm expecting is that even if the box office remains the same each quarter, the revenue will still increase for AMC, the profit will still increase for AMC because of how they're efficientizing some of their infrastructures. And that's what we want to look out for. And you can see this article reinforces the strong box office momentum we've been seeing, especially the record 2.86 billion domestic year-to-date figure. This is some of the biggest things that we are looking at right now. Studios are refocusing on theatrical distribution, and premium large format screens like IMAX are becoming critical for big payoffs. Now, this is pretty much the biggest thing that we have been focusing on. The reason for this is because you're seeing how everyone right now is focusing on premium large format screens. And what you will realize is that AMC has been doing this for the past few years. We have positioned ourselves for this exact moment, for the time that the box office is booming, for when people are going to watch the movies, and when it comes to the fact that they're choosing which movie theaters are the best, AMC is now now at the forefront. This is why I said, even if the box office were to stay the same, we are able to make more revenue, we are able to make more profit, because more and more people are choosing to watch these movies at AMC right now. Our market share is only going to get bigger and bigger, not to mention what we've talked about with the Arena 1 as well. These are all the things that needs to be talked about. And you can see the AMC earnings we talked about suggest that a way forward for both movie theaters calls for doubling down on kinds of experiences that still feel worth leaving the house for. We've already talked about with how revenue were up to 21 billion and attendance rose nearly 14%. AMC is also generating record revenue on per patron basis from tickets and concessions. It just strengthens the point. This is one of the biggest points that I want to mention. Even if the box office were to stay the same, AMC is going to do better. And this is exactly why. Not to mention, the box office won't stay the same. It's only going to get bigger and bigger. So you can just imagine how much money AMC is going to make moving forward. Furthermore, you can see as well, we talked about how earlier the Netflix partnership, how this is important because what we are seeing right now is how moviegoing to young people is the antidote to that screen time burnout. What was once talked about as the killer of theaters for these streaming services are now becoming the very opposite. The audiences of these streaming services are now going to theaters, and is why we talked about this is important. Firstly, this is a bigger TAM that we have now got because they want to go watch movies. Secondly, it talks about the opportunities that there is. We're already seeing how Netflix want to partner with AMC and of course others as well, but that also means it opens the doors to plenty of other different streaming services. We talked about Roku, we talked about Disney, and of course many others as well. And so with this in mind, what we can be seeing is how we're going to get an even bigger market than we were expecting. And then that's going to add on to the revenue, that's going to add on to the profit. And it's exactly why we talked about how people are realizing the opportunities with AMC and are choosing to buy as much as possible. But on the other hand, we still have obviously these guys who are trying to give a very low price target. And you can see the current price for AMC, and they're giving a low of 1.2, a median of $2, and a high of $3. But clearly, this is something that I don't agree with. Now, you can call me biased, you can call me whatever, but this is something that I strongly believe that AMC is way higher than all of these targets that have been given out because of what we're doing, because of the sentiment that needs to be talked about. Furthermore, because when you consider the fact that if box office can reach previous highs, concerts reach full potential, and sports to be implemented, we would be set. Anything else would be a bonus. AMC will be on the fence with debt paid, share buybacks, dividend, etc. We just need patience. We've also talked about this as well. Firstly, if the concerts reach the full potential of what we talked about, it will make hundreds, it will make a massive profit. But not only that, we talked about how this opens up to plenty of different potentials. We firstly talked about the potential F1, but we're also seeing how Adam Aaron has been vocal in the past about having college sports. And that's also a big market in the US as well. And so with time, we can only see whether or not these will be implemented. But if it does, you can imagine what that will do for AMC as well. And we talked about the share buybacks, the dividend, and all of these things that will bring AMC to the light. And now if you take a look at the box office, you can already see the white line is what we are seeing for 2026. We were off on a good start, kind of dipped, but we are now recovering. And this is exactly what we want to see, how well we're doing, the acceleration there is, and the fact that this is only going to get bigger. And I'm definitely excited for the future of AMC. And because of this, we have to understand that AMC Moass is unlimited downside for shorts, but unlimited upside for longs. One of the first things we talked about on this channel has been asymmetric returns for AMC. Bearing in mind is that these short sellers have sunk in hundreds of billions of dollars. And when we see the AMC squeeze, we're going to be getting that. And we're going to be seeing how AMC can go up into the hundreds, into the thousands, into the tens of thousands. And that's what we've said with unlimited downside for the short, but unlimited upside for the longs. Another sign of the suppression that's going on, how the short interest dropped to nothing as the stock dumps day after day. AMC, you can see this, but the reason why this is odd is because They're trying to print an image that AMC going down is because of people selling as opposed to people shorting. But we know that that's not the case. Because firstly, when you take a look at the amount of shares that's being borrowed for AMC, we saw 5.4 million shares being borrowed. But what we are also seeing is how the FTDs are increasing for AMC. So they're trying to print this image of short interest going down. So people think that it's not because of short selling that AMC is going down, but rather the investors are selling that AMC is going down. They're trying to print this image. But when you take a look at the actual data of shares being borrowed, of the FTDs increasing, you start to realize it's not because people are selling, but it is because of the short selling. It's because they are naked short selling, they're not reporting the short data, and that's what we are seeing with what they're trying to report to us. Another big thing of this is that what we could be seeing is Discovery lending out their shares because we are seeing an abundance of shares. Now, we talked about this, which is how a potential thesis is that they're lending shares out to know that these short sellers are in need. They're trying to then take money off of these short sellers in return to then buy even more shares, which forces them to create more synthetics, which would then obviously cause the squeeze to happen if they run out of liquidity. The reason why I say this is because Discovery clearly wouldn't want their investment goes to waste. What we are seeing is how they're increasing their stake. They already have an 8% stake. What we are seeing is how they are realizing the opportunity, and it would be foolish for you to go long on a share to then lend out your shares without the purpose of having the plan in mind. If you're lending out your shares and they're damaging the price and you're losing out on money, you wouldn't do that. You will only do this if you have a plan in mind. You can see Discovery increasing their position. And this is what we've said. There has to be something behind the scenes that's going on. They have over 46 million shares with an 8% ownership. Bear in mind, this is something that they have already increased from the 35 million that they previously had. And if we are going to go into the future and we're seeing them increasing their ownership even more, then it really just confirms of what we're saying. They're lending out shares in the short term to get as much money as possible from the short sellers. And with the money that they're getting from lending out these shares, they're then buying more AMC, which causes the short sellers to then create more synthetics, which would mean that they need to borrow more shares, which will mean that Discovery will get even more money and buy even more AMC shares, which will then ultimately lead to the squeeze. This is the theory that we have, and it will become more and more likely if we are seeing how Discovery is increasing their ownership in the next filing. What we're also seeing right now is Vanguard, who are buying a lot of shares as well, and this just really goes on to talk about this. It's not just Discovery and it's not just Vanguard. We're showing them, but this is just some of the many institutions that are buying into AMC. It just goes on to talk about the ownership, the accumulation, the demand for AMC shares. And the reason why we're seeing how recently the AMC haters are quiet, it's because AMC Entertainment is improving their fundamentals to a level never seen before. Theaters packed, new revenue, debt is being reworked, and now we are seeing kind of really the fruition of what we have talked about for the last few years. And you can see here is the exact reflection of how AMC is doing well, therefore it's attracting more investors, and in this case, the institutional investors. Furthermore, you can see this, and this is what we talk about with the strength of the apes. You can see from this particular user talking about they mocked the thesis, they mocked buying when sentiment was completely broken. 330,000 shares, 1.16 average. Now, this is what we are seeing with apes, how strong they are, how united we are, and just each individual, what we are willing to do. And it's why I talked about how if one person alone is able to own 330,000 shares, it really goes on to talk about how much synthetics there is in the system. And now a big thing kind of going to light for the exposure as well is Citadel's year-long fight to block subpoena for MMAT trading records reaches critical moment. And so what we are seeing right now is potential transparency, the corruption coming into light, what we want to see. And also, Blue Ocean trades billions overnight but can't spot 270,000 sketchy orders, essentially talking about dark pool. And you can see here what we talked about with how institutions aren't here to help the retail. They're here to help themselves and each other to take money from the retail. As always, I'm the financial advice, and I'll catch you guys next time.